Morning, Steve Freed with the morning grain comments. Well, markets and grains are lower. It's kind of a risk-off day in a lot of the markets. I think that yesterday's steep decline in the stocks led some people to think that down the road, higher interest rates, inflation could slow our economy, which could be negative to earnings. Also, we're seeing the China COVID lockdown slowing their economy, which could also slow our world economy. For the second day in a row, palm oil futures are sharply lower, again concerned about demand, especially to China, but also still not totally clear on whether Indonesia will stop palm oil exports or not. Plus, end of April, Malaysian palm oil stocks are expected to be up 5%. So all those things are weighing on the market. As far as weather is concerned, it's still dry in Europe. It's still dry in Argentina and Brazil. There is a pattern change for the U.S. And so starting, let's say, mid next week, there'll be a ridge forming across the southern half of the U.S. That should allow for some corn planting. It still stays wet in the northern plains. Right now, it may not hurt the hard red winter wheat crop as much as if that continues down the road. We then expect the ridge to break down early the following week and bring showers across the Midwest. We also note that Oklahoma came out yesterday and estimated this year's wheat crop at 57 million bushels, which is exactly half of last year's crop of 115. As far as other news, I think the market is looking at our export demand for corn, beans, and wheat is a little bit disappointing, although bean export commitment is above the USDA's goal. So we'll be waiting to see if China comes in and starts buying new crop U.S. corn and beans. We'll start seeing if other countries start coming in and buying our corn and beans. And then on the wheat market, you're seeing the Matif new crop wheat futures continue to rally. They're up about $3.90 from when the war started in Ukraine. So there's concern about Black Sea wheat exports. Also, nothing right now out of Canada or out of South America yet. And U.S. prices are still too high for Middle East and North African buyers. So Europe may have to be the difference between lower Black Sea wheat exports and to buyers. But I think buyers were also hoping that they could wait and see some kind of harvest lows to add to coverage. Still watching inflation, important jobs data today. We'll be watching money flow, as some of the analysts this morning on some of the business channels were suggesting portfolio managers should exit the equity and commodity markets and go to the sideline with cash until some of this bearish news settles down. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.